It's Monday the 23rd, I'm FX Plu and this is CurrencyTransfer.com's market update. And the headlines today are that Trump's comments pushed the dollar lower, Parliament's summer break should mean Brexit is less of a driver, and the ECB meeting is unlikely to support the euro. So in a couple of days, Parliament will break for summer, and this means Brexit should slip from the headlines for at least a couple of months or so. Negotiations will continue in the background, but historically, we have seen sterling strengthen whenever Brexit is not on the front pages. For Mark Carney, this probably can't come quickly enough, and his focus can return to the economy at hand. Recent data has all but assured the market that there's very little hope of an August rate hike. Employment data, inflation data and retail sales data last week were all uniformly weak. And if it weren't for President Trump's verbal intervention, cable may have breached the 130 level. We saw this tested on Thursday with a low of 129.55, but Friday closed with the pound back over 130, actually touching 130 before the weekend. So President Trump doesn't like the trade deficit, and he also doesn't like how a strong dollar sucks in imports. He's decided that the rate hike policy outlined by the Fed could damage the economy, because when other economies are not keeping pace, the US rate hikes will lead to further dollar strength. On the back of his comments, the dollar index fell to 94.45 in fear that if Trump is leaning on the Fed, then the rate hike policy forecast may end up being affected. With all of his rhetoric, though, Trump is very careful not to accuse the ECB of currency manipulation. Whilst it's clear that the current policy does allow for a weaker euro, he wouldn't get much support behind any such manipulation accusations, because the Bundesbank agrees with current monetary policy, and their anti-inflation credentials are very well known. Trump's comment moved euro dollar higher to around 117.40. The ECB meeting this week is expected to confirm that the asset purchase scheme will be removed in September, and that they are currently satisfied with the level of the currency. This means that their summer recess will be kicked off with no rate hike expectation ahead of autumn 2019. We'll keep you posted, of course. Anything in the meantime, any questions, pop them in the comments below. Otherwise, I'll see you again tomorrow.